newsmakers, and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, tariffs, taxes dominating the news agenda this morning. On trade, President Donald Trump says the U.S. will raise tariffs on Indian exports over the country's purchases of Russian oil. Domestically in the U.S., another political battle is playing out. The Texas governor has ordered the arrest of Democratic lawmakers who left the state to block a controversial vote on a new congressional map. Well, the early revamp of congressional districts in the state after 5 years rather than 10 has turned into a national spectacle. Now, plenty to discuss with Brendan Murray, our global trade czar, and Suzanne Lynch, our Brussels bureau chief. So thank you both for joining us. Brendan, so let's start with you. There's a lot going on in trade and tariffs. I guess the two main countries still trying to negotiate ahead of that deadline on Thursday are Switzerland and India.
Yeah, exactly. Both have very different scenarios. We have President Trump applying pressure on India because of geopolitical reasons. There's this deadline of Friday for the ceasefire with Russia and Ukraine. So President Trump really ratcheting up the pressure on India. India saying they're not having anything. They're not going to comply with this. Switzerland faces 39% tariff on its exports to the U.S. That's a tough blow. I think Bloomberg Economics said it would hit 1% of their GDP in the short run. So both countries trying to position themselves to avoid what's coming in the next less than 48 hours now, those higher tariffs. But it looks difficult for either one of them to get a deal over the line in time.
Brendan, I love our trade tracker, and actually you can find it on the website, especially if you're subscribed on Bloomberg, because it's difficult to follow exactly what's happening. It changes almost on an hourly basis. So give us a sense also of how, I think Bloomberg Economics put some numbers together on the total tariffs now compared to 6 months ago.
Yeah, so that the average tariff rate for the U.S. is above 15%. When all these take effect, that was it's more than 6 times what it was at the beginning of the year. So and it's almost double what it was a couple of months ago. So the inflation effect that everybody seems to be worried about, that says it's not here yet. We could see that. There are some analyst notes out overnight that if that happens, as everybody expects it does, that the inflationary pressures are just going to kind of keep creeping higher.
We also want to talk a little bit about politically what's happening in the U.S., and for that we go to Suzanne Lynch. Susan, I mean, this, is surprising a lot. Basically, the Texas governor has ordered the arrest of Democratic lawmakers who left the state to block a new congressional map. I mean, this feels like it's a big deal.
Yes, I mean, the pictures coming out of the US on this are pretty dramatic. And I mean, it's speaking to, I think, growing focus now in the United States about next year's midterm elections. This is going to be the moment for Donald Trump when the public gives their verdict on his second presidency, including those tariffs we've just been discussing. And I think Donald Trump has made it clear that he wanted Texas in particular to look at a redrawing of the electoral map to ensure and to try and engineer essentially more seats for Republicans in this very important state. So this move by the governor of Texas has been greeted with outrage by Democrats, but it is important to note here, this isn't a particularly new phenomenon. Parties, both the Democrats and the Republicans, have been accused of redrawing electoral districts to suit their own advantage for years now in the United States. This is the latest example of this. But Texas, of course, is important. It's been a long time a wish for Democrats that they can turn that state, that it can go Democratic. That hasn't happened so far. Donald Trump won the state by about 56%, with about 56% in the presidential election. Republicans still have a majority in the state legislature. Now they're trying to increase that majority by this district redistricting, which Democrats are branding gerrymandering.
Susan, do you feel like we're testing the boundaries actually on what's possible and legal?
Yeah, I mean, it'll be interesting to see if the courts step in on this. The Republicans have said they want to arrest these Democratic lawmakers. What we do know is they probably will face a fine of some kind. It seems less clear about whether they'd face anything further than that. But it's very much a kind of standoff now between Democrats and Republicans on this issue. A similar issue happened back in 2021. That had been delayed, the redistricting, due to COVID. But I think the move here, I mean, we have to remember that the Texas legislature doesn't sit that often. And there was an emergency session called for this, so it's slightly more complex in that case. But definitely one to watch how, where these Democratic lawmakers that are now out of the state, where this goes from here.
And Brendan, I mean, we know that, President Trump's country-based tariffs have basically, they're the centerpiece of what he's trying to do, which is trying to shrink trade deficit, but also pressurize companies to shift manufacturing jobs and investment to the U.S. As soon as you talk about India with what they're doing with Russian oil, I mean, how much of the geopolitics is getting into this?
Well, definitely. The president is feeling pretty emboldened by his tariff policies so far. He got a deal with the European Union, which is the largest U.S. trading and investment partner, and so he feels like he can use these tariffs to accomplish what he wants, not just economically, but in foreign policy as well. So we'll have to see if the President Modi doesn't look like he's going to give much of an inch here. But this is one of these. This is a big test of Trump's use of tariffs. If it works here, he could apply it in a number of different places. Yeah,
and we'll see also how Switzerland negotiates with, of course, the 39% tariff. Susan, there's been so much outcry from many governments in Europe that actually the president of the Commission gave too much away to President Trump. I mean, was this a negotiating tactic, or I don't know what you're hearing in Brussels? Why was services, for example, not brought up as a point of contention with the U.S.?
Yeah, Francine, there's a lot of soul searching here in Europe since the EU struck that deal of 15%. And there's something of a blame game going on. I mean, the way it works here in the European Union is that the European Commission negotiates on behalf of the 27 member states. But those 27 member states are informed and kept in the loop throughout that process. So the Commission privately has been pushing back here in Brussels, saying, hang on, if you had an issue with what we were going to agree, you had ample time to say that. So there's something of buyer's remorse going on here. And the other challenge always for the European Union in these negotiations was that each country had its own priorities. So, for example, with France, they wanted to protect the wine and spirits industry. For Germany, it was the car industry. So, even though there was unity of a sort in terms of the negotiating tactics, the priorities were different. Now, as we settle into the summer break here, I think the news coming out elsewhere, the fact that Switzerland, geographically so close here, to Brussels, and also which has this huge trade surplus in goods with the United States. The fact that they have been hit with 39% obviously makes the 15% deal by the European Union seem not so bad. In saying that, the size of the EU market, the fact that it's a market of 450 million consumers, means that the EU had a very strong hand. A lot of people now are thinking that they didn't play their cards strongly enough, that they should have threatened, as you said there, to hit US services, that they could have played a stronger hand. But their negotiation position was not that. Now they're here with the 15%. But we're still waiting to hear some details from the US. We did have those executive order last week that were published by the White House, but we still haven't had any kind of joint text between the EU and the United States that we had been expecting. We still don't have the kind of legal basis for what's happening with other sectoral tariffs, like exactly on cars, steel and aluminium. So there are still a lot of loose ends that have to be picked up here. The European Commission will be briefing around lunchtime today, so let's see if there are any further details on those.
Susan and Brendan, thank you so much for a terrific briefing. Brendan Murray, Bloomberg's trade czar, and Susan Lynch, our Brussels bureau chief. Now joining us for more is Wolf von Rotberg, equity strategist from Safra, Sarasin. Wolf, thank you for joining us. First of all, given we're talking about tariffs and trade, and of course this influences everything when it comes to equities and equity strategy, what can the Swiss government do now to lower the U.S. tariffs?
Well, predominantly, I would think they, will try to get access to the president in the U.S. and then find some sort of common ground to negotiate a trade deal, because obviously he was the roadblock in order to get this deal across the line, and he needs to, kind of say what he wants. I think there's quite some speculation around, is it just about the deficit? Is it about pharma? basically being a proxy here, using those tariffs against Switzerland in order to get some drug prices down. And the Swiss government will likely listen to him and try to accommodate him. What they obviously don't have is a lot of leverage, as the EU has or as China has, in terms of pressuring or putting some pressure on the US in order to agree to a deal. So they need to make concessions, and we'll probably find out in the coming days what these concessions will be.
But, Wolf, I mean, it's fair to say that the market reaction has been pretty muted. 39% tariffs is a big deal. Why has it been so cool about it?
Yeah, I think there are three main reasons for that. On the one hand, obviously, there's still scope for a deal. It may not have to happen until Thursday, obviously, 7th of August, when President Trump said these tariffs would be implemented. He gave Mexico back then a 90-day period or an extension, which may also happen. Or even if those tariffs are implemented initially, they may still be negotiated lower in the coming weeks. I think that's one reason that the market is not fully discounting the impact. Secondly, the Swiss franc reaction was quite negative, and this has really been one of the major headwinds for Swiss equities in the past few years, I would say. And if there's some scope for the Swiss franc to fall, then there's also scope for Swiss equities to perform reasonably well. It must be said, the US is not the only export market. It's also the European Union, obviously, biggest export market for Swiss companies. And other regions globally. And the third reason is, if you break it down, the 39% obviously sound like a big number, but 70% of exports are excluded, which is gold and pharmaceutical products, which account for around 50% of Swiss exports to the US. And so it's a very narrow and limited, let's say, range of sectors which are actually being affected. So trade-weighted, we would be talking more about 20% tariffs.
So, Wolf, give me a sense, first of all, on whether you're expecting still muted reaction, even if it's confirmed after the Thursday deadline that tariffs remain pretty high. And how do you play this market right now in Switzerland?
So I would think if they were to go through and we get a confirmation of the 39% on Thursday, there would be no major sell-off across the market, but there would be some sort of differentiation between, let's say, the more industrial watchmakers, chocolate, and so forth. So on the one hand, the companies which are very much in scope of the tariffs, which are those sectors, but then also in particular the ones which really cannot divert their exports to the US, for example, through the European Union, because the Swiss-made brand is important. So the watchmakers in particular, and here in particular I would say the mid-market, low-market names which do not have a lot of pricing power, where is the higher range, end watchmakers are probably finding it a bit more easy to put the tariffs or to kind of add them on the final consumer price.
Well, talk to me a little bit about, the U.S. consumer. I know some of the figures, some of the data were all over the place because of trade and tariffs. At the same time, we're definitely seeing a bit of a weakening onto the consumer at all. When you, overall, when you look at equity strategy globally, where do you want to be invested in?
I mean, it's, we've had a tremendous 4 months now in terms of bouncing back from the April lows. Where this has taken us is basically to the highs which we have had in 21 in terms of valuations in the US. So the market as on a whole in the US is trading on a 22 times 0.6 PE, which is close to the record highs. X the Magnificent Seven, if you can still call them like this, we're still trading at 20.5, 20.6 times, which is, also close to the record highs which we had seen. So the market is really priced for perfection. And I think even if we look at the more, internals of the market, cyclicals versus defensives, new record high in the US. And then this, kind of against the backdrop of an economy which I would say really shows signs of slowing, and this is a trend more than just a blip in my view. We've seen it since the beginning of the year. We look at the consumer data, PCE, personal consumption coming off, 6-month changes being negative. On the labor market, obviously, there's a lot of debate around the Friday number, how much of this is just down to DOGE cuts, government job reductions. But I would even say, the private payrolls are also down to the lows which they had seen since the end of the pandemic. on a 3-month moving average, 51,000. And this also is reflected in the JOLTS data, job openings coming off, quits rates rising. So there's a lot of data on the labor market, which is weakening, on the consumer, which is weakening. ISM on Friday was quite weak, I think, which has fallen a bit under the rug here. Also on the employment side, the number was weak on the ISM. And then we look at the housing market as well, where we see prices falling and a lot of supply coming to the market with not much demand coming through. So there are a lot of signs, I would say, which are telling us, look, the US economy is on a weakening trajectory. And the equity market is priced for a very strong growth trajectory. And I would say there, will be some moment of consolidation coming up. And I wouldn't buy into the equity market right now. And I would go rather defensive than cyclical, given what we've seen in relative performance over the past few months.
Wolf, thank you so much for joining us today. Wolf von Rotberg there, the equity strategist from Safra Sarasin. Coming up, as European earnings season motors along, we'll bring you a roundup of today's big movers as the impact of tariffs weigh on corporates. That's next, and this is Bloomberg. Now, concern about the impact of U.S. tariffs on economic growth is denting investor sentiment in Europe, and that's been a theme during this earnings season. Let's bring in Chloe Mealy, our EMEA earnings specialist, for a roundup of today's big earnings movers. Chloe, what do you have?
Good morning. So let's start with Diageo. So Diageo actually expects quite muted sales growth for this year and a bigger tariff hit than anticipated, but it reported quite positive volumes, which was compared to expectations of a decline. So it's pushing that narrative of a recovery, a slow recovery, but a recovery nonetheless. So it's pushed up the shares higher this morning. Moving on to Hugo Boss, we've got a positive mover there as well. So Hugo Boss reported profit there, beat estimates, it reaffirmed guidance, and that's really pushing up those expectations of an encouraging recovery as well for Hugo Boss. Shares are up 6%. And then finally, DHL. DHL also reported profit that beat estimates. It's benefited from price increases, from an ongoing cost-cutting program, and then also the fact that it's really not as exposed to the trans-Pacific trade as other companies in that shipping sector. And that's pushed up the shares as well. We're up almost 5% for DHL this morning.
Chloe, thanks so much. Chloe Mealy there with the very latest on some of the earnings. Now, tech stocks also outperforming in yesterday's U.S. rally. This as Palantir reported a surge in revenue, with the company citing what it called the astonishing impact of artificial intelligence technology on its business. Well, Palantir shares getting pre-market. I could not be more delighted to be joined by Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence. Gina, tariffs, what tariffs? As long as tech is booming, the market seems to be fine.
Yeah, I think that's a great point. And when you're sitting at, especially in the U.S. equity market, that is 40% of the market cap is concentrated in tech and communication stocks at this point, that's kind of everything in the U.S. equity market. When you exclude those segments, you do see some impact of tariffs. You do see some weaknesses that have emerged. You see, the rate of growth of segments outside of the tech space has actually decelerated materially into second quarter and is expected to remain pretty stagnant in the second half of this year. So when you exclude the impact of AI and tech and everything that's happening with modern defense spending, you are seeing an impact of tariffs, but it's really difficult to see when you look at the top line, and 40% of the index is related to those themes.
But Gina, is that because there was also a lot of front loading, so it takes a couple of, if not months or even quarters to follow through?
I think
are they absorbing the impact?
Yeah, this is a very astute question, because I think we naturally in markets assume a news event happens, we're going to see it in the data tomorrow, and that's not necessarily how things progress. And especially because we're moving now from an average tariff rate of about 10% for the ex-China countries trade with the U.S., we're moving to a closer to about 15% average tariff rate over the course of the next couple of quarters. So the companies that were impacted in the second quarter will see even bigger impacts in the third and fourth quarter. How it impacts the broader economy is yet to be seen as well. Remember, the U.S. consumer, generally pretty resilient as long as they're not facing inflation acceleration as they did in 2022. How much of this price pass-through comes to the consumer in an environment where generally they're seeing a slowdown in economic conditions and a slowdown in job stability? I think that becomes a little bit of a source of friction over the second half of this year. Most economists are not anticipating this to ultimately result in some kind of economic recession or major job market weakness, but if it does, that could have material impacts on the market at large.
Gina, how are you seeing actually chief executives behaving? Again, the million-dollar question is how are exporters behaving in the rest of the world?
Right.
But in the U.S., is it just, are they cutting capex? Are they standing still for the moment? Or are they taking harsh decisions?
So what was really interesting is no. As a matter of fact, in our CEO sentiment, the things that we look at during an earnings season, we scrub through all of the transcripts of the earnings releases, and sentiment is back to peak levels. So it's difficult to determine how much of this is the CEOs and the folks on the earnings calls just putting on a happy face and saying that things are going to be great, we're going to survive this, we've got plans for the future, and how much of it is real trends. But nonetheless, sentiment is very positive among U.S. CEOs. I do think there's a difference in spending, and we did detect this in our last quarterly review of what's actually happening in terms of capital spending, dividend deployment, buybacks. In capital spending, you're seeing material acceleration in capital spending inside tech and communications again. So those stalwarts that are really driving all of the attention, with a stall in capital spending outside of that space. This could become an issue going into 2026 because remember, we're all anticipating that AI progresses to become a productivity enhancer for the rest of the economy and non-tech industries into 2026 and 2027. If these companies are not even going to spend on AI, not even going to invest for the future to drive productivity growth because they're so hamstrung in terms of uncertainty, that could become problematic into 26, 27. But it's very early to make those presumptions.
Gina, I mean, if you think of what, tariffs are, it's basically the centerpiece to try and, shrimp trade deficits, fine,
right.
But also bring investment and bring manufacturing to the U.S. What does that mean for U.S. equities? Does it have an impact?
In the short run, not necessarily. These are all commitments to invest in the U.S. We're not seeing real dollar flow into the U.S. really on account of these arrangements made by the president. Whether or not that happens in the next 5 to 10 years is up for debate, but it's not going to be a material driver of change in the very short run. The material driver right now is this new tax that we have on imports that companies have to figure out ways to either get around or pay or negotiate with their suppliers. That's definitely creating some tension. Is it creating material downdraft and growth? It's definitely slowing conditions. It's creating some margin pressures. For the first time in 2 years, we saw net income margin and operating margin in the S&P 500 experience a little bit of weakness in the second quarter. Margins are going to continue to be an issue through the second half of this year and into 2026 on account of tariffs. Will we longer term see some investment? Remains up for debate. I do think right now companies are just trying to scramble to figure out ways to sustain rather than fully change their supply chains based upon these tariffs.
I mean, in 20 seconds, are you positive on tech?
Yeah, it's really difficult not to be, frankly. It still has very strong price momentum, strong earnings growth. The really difficult point for tech is valuations, which are just undeniably extreme. But typically you can see tech valuations become even more extreme until a point of material earnings weakness emerges. That point emerged in the middle of 2024. We did see tech take a back seat for 3 consecutive quarters, underperforming the rest of the S&P 500 at large. But it's back. And until you can get a point of weakness emerging in earnings, it's really difficult to fade that trade.
Gina, thank you so much, as always, for joining us. Gina Martin-Adams, Chief Equity Strategist with Bloomberg Intelligence. Coming up, we'll talk trade and tariffs with Rebecca Harding from the Center for Economic Security. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Not done yet. Donald Trump vows to ramp up tariffs on India over its Russian oil purchases, a move that New Delhi slams as unjustified. The Texas governor orders the arrest of dozens of Democratic lawmakers who fled the state to block a controversial plan aimed at redrawing the state's congressional map. Plus, BP is set to review its entire business as the oil major faces mounting pressure to deliver on the turnaround. Meanwhile, Aramco reports a fall in profit for a 10th straight quarter. Now back to our top story. India is under the spotlight after Donald Trump said he would be substantially raising the levies on Indian exports to the U.S. due to India's purchases of Russian oil. Now, New Delhi has responded by calling the tariffs unjustified and unreasonable. Well, joining us now is Rebecca Harding, Chief Executive of the Center for Economic Security. Rebecca, thank you so much for joining us. I mean, Modi was an ally of President Trump. What do these kind of tariffs tell us about the intent of what Donald Trump is trying to do?
So tariffs for Donald Trump have always been two things. They've been about national security, to close the budget deficit, which he's declared an emergency, a national emergency, and then they've also been political. So that, and I think what we're seeing at the moment is this political element of tariffs in just about every single deal that's gone through over the last couple of weeks. Since in the wake of the deadline coming up of the 2nd of August, what we've seen is all of those deals having a political element to them. So it really does tell you what we thought was going to happen before President Trump was elected. We thought he would use tariffs as a negotiating tool, use it as a means for coercing the rest of the world into his way of thinking, and that's exactly what's happening.
So give us a sense, actually, of what this negotiating tool leads to. So what does Donald Trump need from India? Is it security or is it something else? Is it actually really pressure on Russia because he wants Russia to stop in the attack with Ukraine?
So what he looks at is, number one, is there a tariff? What can he do with tariffs? And what he can do with tariffs at the moment, and what he's using a lot at the moment, is secondary tariffs. And this is really interesting because countries that have a trade with a sanctioned country like Russia are now being sanctioned themselves and through tariffs. So what he's trying to do is squeeze Russia a little bit more into some kind of submission, because India has been an incredibly important route for Russia to export its oil. Now, one of the interesting things would be if he then decided to use the Middle East, of course, as one of the routes, because the Middle East has also been very important in taking Russian oil as well. But what he's trying to do here is put the pressure on President Putin, but it's outside of all of the other negotiations that are going on with India. So you will see within these deals that are done, deep in the weeds of them are political things that he is trying to achieve as well, and it's that's making everyone say these are just handshakes. They're not actually something that is signed, sealed, and delivered on economic grounds, because economic deals take ages to form. These are political ones.
But, Rebecca, give me a sense of when you think these deals are sealed. I mean, it feels like, there's been postponing. If you're a CEO, a global CEO, or even a country need to make a decision on tariffs, is this going to be an ongoing negotiation for the next 3 to 4 years?
It's unlikely that Donald Trump and his administration will take their foot off the gas in this sense. And that's one of the reasons why you're seeing this sort of sentiment out there that things might be okay at the moment, but nobody's really quite sure about what might happen in the future. So you're seeing a lot of companies saying, well, our profitability is down, it is being squeezed. The impacts of tariffs is, Ford came out last week and said it's going to be $2 billion on our profitability. What's happened with trade over the last 6 months is actually a lot of trade has happened ahead of Liberation Day and then Liberation Day 2.0. So there's been a lot of activity, a lot of economic activity to try and stockpile in the United States to circumvent these problems. But you've also seen a lot of deals being done, and tariffs and trade also being diverted through other countries. So what President Trump and his administration is now doing is saying, right, we'll use secondary sanctions to stop that trade diversion, because that's undermining the power of tariffs.
Rebecca, talk to me about the EU-US deal. Again, there's been a lot of outcry from many parts in Europe saying that actually the Commission didn't fight hard enough, that the US got what he wanted. I know there's a bit of an outcry because President von der Leyen actually even went to Scotland to meet with the president. But again, is it just because Europe needs the US in terms of security that they agreed to the deal?
So again, before President Trump was elected, there was a lot of talk around NATO and the EU having this 5% of GDP on defence spending. And President Trump's administration was always very clear that it was going to use tariffs to achieve that. It's achieved that. And what it's also done is it said, fine, we'll provide a security umbrella to you. Absolutely happy to do that, but you've got to buy our defence equipment. In other words, you've got to pay for it. So what's happened with all of this is that the EU has gone, if we engage in a scrap, so if we use our anti-coercion tools, for example, or any retaliation that was on the table before President von der Leyen went to Scotland, actually it would have created a trade war, it would have created retaliation. And the EU, the politics in the EU are so fragile that actually at the moment having a trade war and threatening economic growth would have been very worrying for them. So it's kind of avoiding conflict at the moment and accepting that even though Europe is there in terms of spending money on defence, it's going to take a while for supply chains to adjust.
Yeah, what can Switzerland do now actually to try and lower these tariffs?
It's very hard to see what Switzerland can do because Switzerland is actually a country that spends a lot of money in the United States. It's the largest investor in the United States in Europe. So it's hard to see what it can do. And gold and pharmaceuticals are going to be uncompetitive at the moment because they've got this higher tariff posed on them. So, I mean, they are talking about it at the moment, but it's going to be something around reducing the tariffs that are imposed on the US when the US is exporting to Switzerland. That's the only language that the Trump administration understands. So this is all about I export more, you export less, I win, you lose, and that's how the negotiating is going on. We just have to get used to the fact that this is now a very transactional relationship, and Switzerland is astonished by that because it never thought it was going to be involved in those sorts of political things. So it's just a trading nation, right?
Yeah. Oh, Rebecca, thank you so much. You're right. They're a little bit surprised from what I can find out speaking to the people in charge. Rebecca Harding there, Chief Executive of the Center for Economic Security. Now, German auto chip maker Infineon is expecting flat sales in the current fiscal quarter. This comes as uncertainties about tariffs, of course, continue to weigh on revenue. Now, the Chief Financial Officer, Sven Schneider, spoke to Bloomberg's Oliver Crook about AI demand and the potential impact of tariffs.
I would say from today's perspective, the indirect tariff guesstimate for this fiscal quarter is probably less pronounced than we thought last quarter. On the other hand, we are faced with more and more negative currency headwinds from the weakening dollar, which offsets to a certain extent.
Well, Oliver Crook is here in London with us. Ollie, first of all, I'm so happy to just have you in the studio. But look, when you look how it comes to Infineon, I mean, it wasn't great. Yeah. It was fine, but at least it shows that you can still make a living in this macroeconomic environment.
That's right, and bringing good news from Germany, bullish news, is a sort of rare event for us. So yeah, I mean, the stock is up almost 5% right now because the market is really focusing not on the slight revenue miss, not on the fact that everything else is in line, a big beat on the margins, but also namely this demand for AI. So we talk about demand for AI, everyone's sort of gushing over the C-suite. They have put an actual number on what that actually will mean for Infineon this year. They're going to double their revenue in AI and data investment in terms of revenue for that sector of the business this year, and it may double again next year. And in terms of tariffs, they've also been talking down the impact that it's been. They basically last quarter said we're going to account about 10% revenue decline due to the tariffs. That did not materialize, so overall a bullish picture for the market today.
Okay, and then there's, of course, the U.S. trying to ramp up this chip tracking tech, which it basically allows to follow a piece of technology, right? The chip to know where it ends up.
Yeah, and my question was, can you actually do that, right? So this is one of the things we spoke to about the CFO, is basically how active have discussions with the Trump administration been about this? Have a listen to what the CFO had to say when I asked him that.
We are part of these conversations, but please understand that I cannot go into details and share these at this moment in time.
Is it possible, I guess is the question, rather than the actual conversation, is it possible to do that? How feasible is that demand or that request?
I think it's always possible to do something. The question is, how long will a certain advantage last, and how quickly will others then cope with these technologies or have countermeasures in place? I think that's still out for discussion.
So it sounds sort of technologically something that they possibly can do. It sounds like they are in talks with the U.S. and the Trump administration about doing this. I think the risk for a company like Infineon, who sells mostly to the auto sector, mostly to EVs, their biggest market is in China. If you comply with the United States on this, are you going to be able to potentially harm your market in China? That is going to be one of the dilemmas for the companies that are caught between these two titans.
Yeah, it feels like this is a Europe problem, right? You go, east if the West maybe shuns you a little bit more. I love that. It was like very cloak and dagger when you said actually what's going on there. And he said, I cannot possibly talk about it. Oliver Crook there with a fantastic conversation with Infineon. Now, BP shares gaining after it posted a second quarter beat, announcing a $750 million share buyback. The oil and gas major says it's achieved a further $900 million of cost cuts and will raise about $3 billion of divestments. Now, the company's chief executive, Murray Auchincloss, spoke to Bloomberg earlier.
Demand remains pretty robust, if I'm honest, despite all the headlines. 1% growth in demand over the past 20 years or so. 2025 looks like 1% demand growth. 2026 looks like 1% demand growth to us from different sectors, from petchems in 26. But demand growth continues to be strong for the product.
I butchered his name, Auchincloss. And now let's get more with James Heron, our senior editor for energy and commodities here in London. James, so good to speak to you. Look, BP is actually not bad at all. But what was most interesting is also the kind of them updating us on the progress on the strategy.
Yes. So the big announcement they gave today was the new chairman, who's just been hired in, following pressure from the activist investor Elliott, is going to do another review of the business. It's a little bit curious because the CEO, Auchincloss, did the similar thing in his first year on the job, which resulted in the strategy reset. So it's not really clear how much further they're going to go. But certainly in the earnings today, we saw a positive reaction. We saw numbers moving in the right direction, good cash flow number, earnings beat estimates, improved reliability in assets, good progress on cost cuts. So it's the kind of thing that I think BP would have wanted to see in terms of operational delivery, but nothing really to dramatically change the picture.
So, the question is it enough to satisfy some of the investors, the activist investors?
BP has always said that the strategy reset is a multi-year process, and the investors have kind of been a bit more impatient than that, so we'll have to see. Obviously, the wider environment has changed a bit, especially with Shell kind of killing any speculation they would take over BP. So operational delivery might be all there is for now, at least, until something else comes along.
James, we also had Aramco earnings, and actually, again, they're having a tough time.
You're seeing the dichotomy between increased production but lower oil prices, because obviously OPEC's been adding a lot of oil, much faster than expected, into a fairly weak market. And so we're seeing, another quarter of lower profit from Aramco. Its cash flow is not high enough to cover its base dividends, so it's having to increase its leverage. It has quite a lot of headroom here because its debt is way lower than any other oil major you look at. Certainly nothing in the earnings today to really turn around this sort of steady decline we've seen in its share price for quite a few years now.
James, overall, if you look at the commodity spectrum, if you look at the oil giants, is it just a question of whether the economy grows and what happens to the price of oil?
That's a big part of it, yeah. And also the other side is supply, obviously. So OPEC has just this weekend agreed the final tranche of this 2 million barrels it's adding into the market. That's coming at the same time when growth outside OPEC Plus is more than enough to cover increasing oil demand. So even if, the predictions for growth follow through, we're still looking at a pretty big surplus by a lot of estimates this year and next year. So potentially a prolonged peak of weak oil prices. So we might see profits continue to be weighed upon by this surplus.
James, thank you so much. James Heron there, Bloomberg's senior editor for energy and commodities. Now, coming up, Russia's secret war and the plot to kill a German chief executive. We'll bring you that story. It's today's big take. It's really quite fascinating and also shocking. That's in just a moment, and this is Bloomberg. Well, today's big take is an in-depth investigation into Russia's plot to kill the boss of a German defense giant, Rheinmetall. Yes, you heard that right. Armin Paperger has led the company's efforts to arm Ukraine. Now, it's brought the weapon supplier unprecedented sales numbers, but it's also turned the chief executive into a Russian target. Our senior writer, Stephanie Baker, worked on the story and joins us now. Stephanie, first of all, it's a really in-depth, fantastic big take, so I urge everyone to go and really read it. But what's the premise of this? Like, what happened?
Well, last year, there were vague reports about a Russian plot to kill Paperger, that U.S. intelligence agencies had warned their German counterparts of this plot, which they then foiled. And I wanted to dig in and find out what really happened, what was this plot, and what was the outcome. And I discovered that actually German authorities had investigated very briefly this plot, but dropped their probe due to a lack of what they called concrete leads. And that surprised several people familiar with the situation, who said that actually the U.S. had passed on very extensive details about this plot, including individuals and intent, and that a few of the individuals that they've been tracking were actually still at large in Germany as late as the end of last year. So I just thought it was a really interesting story to dig into and explore why the German authorities had not been able to track these plotters down. Mm-hmm. Rheinmetall, as you know, is absolutely central to Europe's efforts to rearm itself.
And how important is Rheinmetall to Ukraine's defense?
Well, I think because it is Europe's largest ammunition producer, it is absolutely essential to Ukraine's defense and to Europe's efforts to restock depleted stockpiles that they've given to Ukraine. Ammunition stockpiles have been run down dramatically, and the NATO chief, Mark Rutte, just said recently that actually Russia is producing in 3 months the amount of artillery ammunition that the NATO alliance countries produce in a year.
So, again, how advanced? I mean, this was not the only threat, or actually it was the most advanced plot to kill a Western CEO, but it wasn't the only one.
Yeah, what I was told was that there were plans to target other European defense CEOs, but this was the most mature plot in the works. It wasn't just a plan on the shelf. It was a plot actively in the works.
I mean, what does it tell us about Russia's, I guess, intelligence operations or operatives in Europe?
Right. So last year, there was this dramatic escalation of Russian sabotage attacks across Europe, including planting incendiary devices on DHL facilities. There were various fires, one in Poland and one in Latvia. And I think there was real concern that some of these operations could spin out of control because so many Russian intelligence officers had been expelled from Europe that they are now turning to proxies who they can't really control. These are often criminals, guns for hire, so to speak. So the operational security on some of these plans is not very tight. And I think that's why a lot of them, in many cases, got ahead of plans, ahead of their skis.
Stephanie, is local police taking it seriously, or is it, for example, does Rheinmetall CEO have to rely on private security?
I think it's a mix of both. His security is very intense. Wherever he goes, he's accompanied by bodyguards. He has intense security both at his home and his office. So the threat appears to be ongoing. Otherwise, they would have lifted the intense security around him.
What was the most surprising thing you learned in this really great piece of journalism?
Well, the really interesting thing is I think that Germany remains one of the softest targets in Europe for Russian sabotage attacks, partly due to historical reasons. They have strict limits on surveillance and a strict separation between law enforcement and intelligence for historical reasons as a result of Nazi Germany. And I think that makes it hard for them to track down some of these plots because they can't use as easily intelligence and law enforcement working together as, say, the U.S. might be able to. Also, Germany has a large Russian diaspora that is proving to be fertile ground for Russian intelligence operatives to tap into. And I think surprised me how open Germany is to some of these Russian sabotage attacks.
Stephanie, thank you so much. Stephanie Baker there with our senior writer with this great story that everyone should go read on the Bloomberg terminal or also on our website. Now on to tech, and Tesla has approved an interim stock award worth about $30 billion for the chief executive, Elon Musk, to keep his attention on the automaker. Now it includes a 96 million shares that will vest if Musk continues to serve in the top post for another 2 years. The massive payout comes as a legal fight over a 2018 pay package drags on. Tesla's board calls the award a first step, good faith payment. And the White House's head of science and technology has told Bloomberg that the U.S. is looking at fitting chips with better location tracking. It's part of a broader plan to curtail smuggling and maintain American technological dominance. Now let's bring in Peter Elstrom, our executive editor for Global Technology. Peter, thanks so much for joining us. I mean, this is fascinating because I was thinking, is it the NVIDIA chips that someone got hold of, or do we know what they actually want to stop and target?
Well, Michael Kratsios, who you referred to, went to this summit in South Korea, and he tried to deliver this message to the countries there that the U.S. is open for business and the U.S. wants to be able to sell these chips and their services because we have the best chips, particularly from NVIDIA and also AI models. But there were many questions about security. Sort of the backdrop to this are the tensions between the United States and China in particular. And one of the things that we've learned is they do want to put trackers into chips as much as they can, especially these sensitive chips. And Kratsios said, this is part of our AI action plan. We want to be able to export these chips, but we also want to know where they're going. There's been quite a bit of smuggling of these chips into different countries, including China. And one of the concerns for the U.S. is that if they do have restrictions on some of the highest end chips from NVIDIA, can they figure out whether they're going into China or not? And there's a policy debate right now. NVIDIA says essentially it's not a problem. There are not very many of them. You can't pack them into your suitcase, for example. But the U.S. government is convinced there is an issue there, and they want to do better at constraining that. And
do we have the technology? Is it blockchain?
Well, that's what they're working on. That's what they're working on right now, and they are having discussions with some of the key chip companies, including NVIDIA and AMD at this point. But it's not in the technology right now. NVIDIA came out very clearly and publicly said they don't have this. They were summoned by Beijing officials to come into the offices and discuss this idea that maybe the chips that NVIDIA is selling into China could be tracked or shut down, for that matter. And NVIDIA said they do not have that technology in the chips right now.
Peter, talk to me about Palantir. I mean, it was on fire because AI is changing everything.
Right. Well, they're answering one of the big questions. So we have all this investment going into AI infrastructure, into data centers, into chips. We tallied the amount of money being spent by the four biggest technology hyperscalers, $340-some billion this year alone. And one of the big questions is, are they going to be able to generate revenue from that? Are we going to see revenue from AI that's sort of parallel to these investments? Well, Palantir is one of the early ones who's actually capitalizing on this. They're selling a lot of software to companies and governments. They really made their name working with the U.S. Army, with the Space Force. They have a big contract also, and they have seen a lot of growth in that government-related side of their business. But now they're seeing even faster growth on the commercial side of their business, this idea that companies are figuring out how to use some of this technology to collect data and then use it to make intelligent decisions about their businesses.
So interesting. Peter, thank you so much for joining us today. There's Peter Elstrom, our executive editor for Global Technology. Now, coming up, we'll have, of course, plenty more on some of our top news stories. That's tariffs and trade. Also, the Texas governor ordering the arrest of Democrats who left the state. The focus firmly on earnings. Look, I counted about 15 European companies that came out with earnings today. I know there's plenty more tomorrow and the day after. The focus this week is definitely stock extending some of the rebound on earnings, but also bets of a rate cut in the U.S. and elsewhere. Up next, Bloomberg Brief, and this is Bloomberg.